I was live trading during this time. Uh, so, a lot of you who are in the live trade, you guys actually saw this trade. You might have taken the trade with me. It was a really good trade. I caught pretty much the bottom of the day, and then I took calls, ripping up here, scaled out, bought some more, and then scaled back out here, and basically called it a day, right? So I'm gonna kind of flip around here and there, uh, just kind of going over the major key takeaways, right? And this is unique for everybody, but for me, I think these are the things that I really want you guys to focus on. These are the things that I took away from the trade when I was reviewing it. And so number one, obviously, patience, 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 right? So I hear it all the time, especially when people are uh, live trading with me, you know what I mean? And, they're watching it. They always say, wow, I didn't realize how long you wait for a trade, or you know, wow, you're just watching it. Like, you don't have this urge to, take the trade. And I do, you know what I mean? I totally do. But that's where the discipline comes in. And that's where, just trial and error, knowing that just because you feel like you want to take the trade shouldn't always be the determining factor. You should have other things, technical reasons, um, trading your setup, which is going to be number two, right? Trade your setup. Trading your setup means that, everybody has their strong suits. Everybody has their style of trade. Some people like to, short. Some people like to, go long at the bottom. Some people like to do both, but, some people like playing, certain patterns, right? You might be a person who's really good at bull flags. You might be somebody who's really good at, rising wedges, or, any kind of trade. You just have to figure out what you're best at and what you like doing, what you're comfortable doing and what you perform best. And then, take advantage of that. Why do a whole bunch of different other styles that you're not going to be that good at? You know what I mean? It's like practice, a good 2 or 3 setups and just master them, trade them over and over and over. Ignore everything else, and be so good at it that you can teach somebody else. That's kind of how I go with it. If you can't really teach somebody else and they can't be successful with it, or at least know how to work it, you probably don't know how to do it yourself. You know what I mean? So for me, lately, if we look at, if we pull down and look at what is this, a SPY on the weekly, but here we'll go to the daily. So we are on a downtrend. I think, what is it, the 18th was about right here. So we were making the leg lower, right? We already had a pretty huge red day, and then this was red day number 2. So my logic is, if I already played short the day before and I had success in it, and then the next day it starts selling off too, the put premiums are a little elevated. Not really my style. I'll just wait for the relief bounce. I'm pretty good at those, right? And if we look at the well, don't worry about that. Don't even worry about that. Where is? Oh no, I just pulled down, huh? So let's go back to the weekly. And so mine was the counter trade relief. So that kind of goes with something like this, right? Let's say you're on a downtrend. Eventually, there's going to be seller exhaustion, right? They're going to run out of the gas tank. And eventually it's going to find, it's going to start accumulating at a certain bottom. And then usually we get that like big relief bounce, pull up, and then maybe we continue back down. But this area here can be maximized for a couple of reasons, right? One, you're not chasing. So this is where that patience kind of comes in. If you look at the chart, this is the 1 minute on the SPY. I was waiting pretty much 4 hours and I did nothing, because this is about 10:30 when I made the entry, and the market opens at 6:30, West Coast time. So this whole time I could have played short here. You know what I mean? I could have played calls off this bounce. I could have, but no. The way I was analyzing the market, I was looking at a whole bunch of things, and the risk to reward wasn't really set up that nicely. But when we got kind of down here, things started to click. I started to see some confluences between different charts. And so, that's kind of when I took the trade. So, going into number 3, key takeaways. And so once I start kind of breaking down the trade, you'll kind of see where, all of these kind of played their part. So number 3, we got cut losers quickly in order to re-enter. Now, this is something that took me a while to kind of understand and to really make it a habit, because this needs to be a habit, right? When people say cut losers quickly, that doesn't just mean, hey, you're down a little bit, get out. That means whenever, as soon as your, hypothesis, your reason for entry is being challenged, uh, for me, I'm gonna get out. Not saying that I'm gonna abandon the whole trade, but I'm gonna get out, let the move happen, right? Let whatever it is play out, and then I can get another entry. That way, I'm not exposed to being in the market holding an option contract and just kind of letting my emotions go through that wave of like, am I gonna, is this gonna work? Is it not? And then you kind of have that like built up, pent up anxiety and stress and all that. I don't do well with that. So for me, I'd rather get out, and worst case scenario, it moves without me, and I'm like, okay, like I'll take another trade. There's always another day. There's always another trade. So I'm not pinching pennies to try to just force every single trade. I can sit back and relax, and I don't need to take a trade. It's usually when the setup is there, I'll take it, right? But and then number 4 is multi chart confluence. So confluence meaning multiple technical reasons that kind of stack together, right? When you stack technical reasons to get in, that's having confluence. So if the moving averages are pointing at a bullish reversal, if the candlesticks are pointing at a bullish reversal, if you're hitting a support level, those are together, that's a lot of confluence, right? So the thing for me is, not only am I going to look at the technicals on the SPY, I'm going to be looking at the technicals on multiple different charts, and then linking those together to allow me to get it's like 3-dimensional technical analysis. You know what I mean? So what I like to do, and obviously those of you who are in my lives, you guys already know this, but for anybody who isn't in there, when I trade the SPY, some people do have the VIX up, some people do have like a couple other things up. For me, the thing that I've had success with is having the QQQ up, and then the XLF. And I'll go quickly just to give you a reason why these two are really, really important, and it has to do with the stock heat map. So when you look at the stock heat map of the SPY, you notice that the biggest, kind of ignore the sectors when it comes to tech because they're kind of all over the place, but look at the biggest squares, right? That's Google, Microsoft, Apple, Amazon, Tesla, Nvidia, Facebook. I mean, those are pretty massive, right? And then if you start adding things like AMD, Qualcomm, Intel, Adobe, CRM, whatever it is, that ends up being a big majority of the weight in the SPY. Now, if I was looking at every single sector, let's say I was looking at technology services, electronic technology, health technology, you know what I mean, retail trade, even though I'm just trying to see what Amazon's doing, that's too many sectors. So what I like to do is put all of tech in one place. And where is that? That's the QQQ, right? So when you have it in the QQQ, you're able to see how all of tech, or at least big tech, is doing, and you get a good idea of how that's going to be affecting the SPY and vice versa. I don't know what it is. I had COVID like a month ago, and you still have that like weird lingering cough, so excuse me. But now, what's XLF, right? You're looking over here like, okay, well, financials, right? So XLF, the XLs, or the X tickers, they usually, what they are ETFs of the SPY, like not ETFs of the SPY, but sectors of the SPY in their own ETF. So if you look here, finance, if you look at how big of a chunk finance takes in the grand scheme of the SPY, that's a big portion, right? Now, finance and tech, if you add all those two together, they'll pretty much take up almost half of the SPY, right? Like when it comes to weight and influence. So if you can look at half of the SPY, and they're not usually doing the same thing, you can kind of get an idea of the internals in the SPY and see exactly which ones of the weighted ones that really matter, right? So when you look at it like that, and what's interesting is that the finance, they do pretty well in high interest environments. Tech usually does bad in high interest environments. So they're kind of inverse, right? Sometimes when there's good, really, really good news favoring banks, uh, that's usually at the detriment to tech. So you really want to see like, who's leading for the day between, finance and tech, and then how bad are they moving apart. And then whenever they do move together, uh, that's usually when, you get a really strong move on the SPY. And I might show an example in the future of like XLF going one way, QQQ going the opposite way, and then you start to see that the SPY is actually making like a doji. So very, very important to watch these two along with the SPY, because you can actually make, patterns. Like if the XLF is making a rising wedge into resistance, QQQ is reaching a resistance, and then the SPY is getting close to resistance. Now you have what? You have multi-chart confluence. You have 3 stacks of, resistances that you can actually take a high probability trade on a reversal at a rejection. You know what I mean? So that's kind of how that works, right? And then the last one is going to be identifying market structure. And, that one takes time. That one takes, being in the market for a good amount of time, because you kind of see the same things over and over. So, yeah. But with all that aside, finally, let's just get to the point of the trade, right? I just didn't want people to be asking a lot of questions, before we start. Like, what's this? What's that? I don't understand what's going on. So at least now you know, right? And if you do have questions, put it in the comments, and I'll kind of try to explain it, or slide into one of my lives, and you'll be able to see it in action. And I do live trades Fridays on the Discord, and yeah, I'll explain usually everything I'm doing. If you want to take calls and or plays with me, you can. If you just want to use me as market commentary to take your own trades, you could do that as well. So it's all there. It's all free. But yeah. Okay, so on Friday we open up, and what do we do? So we have a pre-market low. It's holding one of my levels. So if you see these green lines, these are support and resistance levels that I've charted from a pretty long time ago. They're pretty good. They're pretty accurate for the most part, and I use them as a floor and a ceiling. And so when we open up, we hit this level up here, which is the 437.58, and we reject. We come back down. We reject again. But when we try to make it lower, we end up catching ourselves right at that pre-market low, and then we make a bounce up, trying to make a high breakout. Now, watch this, right? So, as the SPY is starting to kind of reach some type of resistance, and it looks like it's trying to use this level that it broke out as support, which it does. You can kind of see that it taps. The issue here is, look what's happening on the Q, and I'm gonna move my cursor, but I want you to kind of look at the SPY and look at the vertical line as I'm hovering over the Q, to kind of get an idea of what's going on. So here I left these here. I thought it was bull flagging. If you kind of look up, you can see that it came up, retraced, and it was retracing into the EMA, which I like on bull flags. It's like an extra layer of support. And I was waiting for the pop, but it didn't happen. It got rejected. So as Q starts rejecting and failing, look how hard it's falling, right? That's a pretty steep fall. But the SPY isn't falling as dramatic. Why? Why would you think that? Well, let's look at the third window over here, and we'll see that. Look what XLF was doing the whole time. It was flats. So you see how the SPY, even though it did go down, because tech is more weighted than financials, look at how steep this is, look at how flat this is, and you notice that the SPY is kind of at that slanted. It's not really breaking through this support completely. It's holding. This isn't holding any support. This is clearly holding the support. This is kind of holding the support, right? So multi-chart analysis. This is kind of how I take advantage of, making plays, getting in, decision making, making my stop losses. I'll take a SPY call, and my stop loss might have to do with something that the Q is doing. But that's, after you get experience with it, that's kind of how, you can trade, right? So this blue line, just to give you guys context, is the 9 EMA. The purple is the VWAP, right? So I want you to, green are levels, blue 9 EMA, purple VWAP. So I'm watching this happen throughout the day, just narrating. I'm like, okay, cool. Bull flag breakout failure. XLF looks pretty strong. It looks like, it is coming lower, but if you've noticed, let me see if I can make a kind of like a trend line. No, okay, I can't. I didn't make a trend line, during the day, but I was just seeing if I could. But here, look, it does make that low, but look at how it's kind of flattening out, right? It went from this really steep fall to a kind of, a steep fall, but not as, not as big of a range. And then it came up and then it's starting to flatten out, right? That's a very important thing to notice when, we're looking at all these charts. So I start pulling this out. I'm going to try to kind of look at them all together, right? Okay, cool. So here's the low, catches it at a level, right? On the SPY. Bounces up, breaks below that level, but makes it back. I'm trying to link this up with the Q2. Hold up. Okay, cool. So, but as we're coming, look what happens here. So this is one of the signs that I was looking at for a potential bottom. I was waiting for it all day. I didn't know if it was going to happen during power hour or anything, but as soon as I started seeing this kind of price action, this is telling me that it's trying to kind of find support. It doesn't want to go lower. It's kind of holding. It is going lower, but not too much lower, right? The lower lows are not going that much lower, which means price is accumulating. It's either going to break down. There's always a chance that it breaks down, or that it's going to hold, right? So now this level, 431.83. This is an important level because let's look. Where is it? I have so many charts. My bad, y'all. Where is it? Okay. So here, that is 431 right here. That's the exact day, February 18th, right? It bounced off this level. This level is important here because that was the strong bounce that took off and took the SPY all the way up to 460 where it got rejected, or near 460 where it got rejected, right? So that's a strong takeoff zone, right? And price has memory, so it's gonna remember what it did the last time it got there, and there's a good probability that it'll have some type of reaction. And then so that's confluence number one. It's a level that had a strong, strong buyers at that level the last time it was touched, and it hasn't been touched ever since, right? That's confluence number one, or that's technical reason number one, right? Technical reason number two. We're going to come here. Technical reason number two, XLF, look at 39. 39 is a flat, clean number. That's a psych level, right? So 39 is a level that it usually has a hard time breaking, that I've noticed. And if it does, it kind of, it flushes. If it stays above, it stays above. XLF likes whole numbers. So as it's starting to get near there, it starts making what? The same pattern as well. Clue number two. Now, QQQ was, a lot weaker for the day, right? This was the one that, sold off. So I wasn't using it too much. This would just be a confirmation if it did decide to follow, the market as it came up. That would be a good sign, right? Now, we're going to switch to this layout, and I might have to pull myself up a little bit. Okay. So what we have here is the SPY on 3 different time frames. This is the same, the same ticker, but this is the 1 minute, this is the 10-minute, and then this is the 30-minute. But I'm gonna, we're gonna use the 30-minute for now. But I was flipping from the 30 to the 1 hour, right? And what you want to see is smaller time frames, more detail, but more noise. A lot of stuff that's not necessary. 10-minute, that nice sweet spot. You get to get a good amount of information, not as many candles, but it's not like the 1 hour where there's only 7, 8, 6 candles or whatever. But you're trying to look for patterns where this is going to give you a small reversal. This right here is going to give you, a sign of, a little bit. But look at this. Nice little doji, right? So a nice doji right at the bottom of a move. And then what else is happening right at the next time? At 10:30, the 1 hour, the 2 hour, and the 4 hour all close. So when candles close, a lot of higher level traders, they wait for candle closes to get the confirmation before making a decision, right? If the candle closes bullish, there's a higher chance that there's going to be a bullish move right after that. If it closes bearish, there's a chance that it's a bearish move after that, right? So this, even though a doji is an indecision, it's a green doji at the bottom of a move, and we are at that, high chance of a bounce level right at that level, right? So But what I did, and here's the mistake that, that I learned from, instead of waiting till 10:30 for the candle to close, I kind of got in a little too early here. I front ran it because I was like, you know what, maybe the move is going to happen before, right? If I had no idea about this, you can kind of see how this can, move up, and then it can be like, all right, we're going to take off here. But that didn't happen. It actually started going lower. Now, instead of me waiting, and this is where, if we come here, cut losers quickly in order to re-enter. If I held, I could have held technically because, I could have waited for the level. But because I had the aggressive entry, I didn't want to deal with that drawdown and then have the potential chance that it just breaks through the level and fails, because that's always a possibility that can happen, right? So instead, what I did was I got out with maybe a 5% loss, something like that, something really tiny. And I just waited, patiently waited for a re-entry. My thesis is still in. I just need more confirmation. I made an aggressive entry with the thought that I'm not holding this until I figure out if I'm wrong or not. I'm getting out quickly so that I can re-enter and preserve my capital. So we get a bounce, right? We get a nice bounce, and it makes a higher high. So I'm always watching the pivots, right? The strong pivots here to here, and how in relation they are to the previous pivots. So I'm looking at each low. Is it making a lower low? That's continuing a downtrend. Are each highs making a lower high? They're going to continue the downtrend. But as soon as we see something like this, right? Very impulsive move down, a nice wick bounce, impulsive move up, right? It's not even 10:30 yet. That's the one thing that I was taking note of when I was live trading. I said, we're not even at 10:30 yet. In this candle, when it was down here, look, watch over here on the 30-minute. When it was down here, if it closed, it would have closed a red candle down here, right? It would have had a long wick to the top, red candle. But in the last 10 minutes, we had this impulsive move, right? And this is why professional traders and stuff wait for the candle to close. They don't want to just jump in before the candle closes, because once the candle closes, that's it. It's history. It's not going to change, right? If you go 10 years from now, this candle is still going to be there. But anything that happens before the candle close, it can flip in a second, right? And a lot of people don't, they don't take that into account. So when it did make that higher high, that's the number one sign that trend is possibly going to change. So what did I do? I waited, and right here was 10:30. Once 10:30 hit, and I saw this green candle here, I made an entry. I took the 440 calls for Wednesday, the following Wednesday. I think I got a fill at like 150. Don't quote me on that, but it was a pretty much like 100% trade. It doubled up, right? And I took it here and I took it up. So I rode this move up. Another thing to note. So that's Confluence, what, number 3 or 4? I'm losing track, but we have a doji on the 30-minute that closed. So yeah, now we get this strong move up. That's giving me more confidence. Another thing that I was watching is, if you look at the 10 minutes, look at the 9 EMA, and look how it's just been a beautiful resistance. Not only on the 18th, but look at the 17th. As soon as we break under, look at that. We do pop above for a moment, but can't hold. And look how look how that 9 EMA just pushes everything down. Bounce up, comes back down, right? The only time we bounce above is when market opens. We get this impulsive move, we can't hold. Once we break below, you could have just used the 10 EMA or the 10-minute 9 EMA as a gauge. If we close above it, I'm going to get out. And look, you could have just rode that down, rejected, came back down, rejected, came back down. But look at all these candles, right? These candles look a lot different than these ones. They're not as steep. They're kind of trying to, they're clustered together. They're not really moving too erratically either way. They're kind of accumulating, right? And once that accumulation happens and we've got this breakout here, right at 10:30, we got a move up. Finally breaking that, the 9 EMA. Once we broke that, that gave me even more confidence to stay into this trade, right? And now we're going to line it up because I just lost where I was. Okay. So now I'm riding it. I'm riding the move all the way up. Bounced off, using this level as support now, right? Once we use it as resistance, we come back up, we break through, we come back, we use it as support, and we just bullish price action after this. And that's kind of when I got confident, knowing that power hour is coming, and if we keep this momentum up, we could really push, right? Now the thing is, once we started getting, first I was watching to see how we would react at the VWAP. We broke straight out of the VWAP. Then I was looking at how we're going to react at this level. I had areas where I was going to trim, so I trimmed at the VWAP, took the move up, trimmed at this level, right? Because I keep trimming at pretty much every level. I took like a contract or two off, just off this rip, just so I can give myself some price cushion, right? Comes up, but as soon as we get this impulsive move up, and then we get this little long wick rejection candle, that's when I started trimming most of my position. So I had a few runners just in case we bounced off the VWAP, because like I said, previous resistance, once broken, can be tested and used as future support. We bounce off here. As soon as we bounce off, I mean, this was kind of luck or timing. I got in right here, and we got that huge screen candle. Premium's just inflated, right? We came up. Once we got that, the two red candles, I got out, and then that was it for that trade. Basically, after that, I took that win, and I waited 4 hours, essentially. I had one failed trade where I lost 5%, but I made it right back with that 100%, right? And that's kind of how I saw the trade forming, how I used multiple time frames to get my confluence, how I used the XLF bottoming at that right around that 39 at the same time that we bottom at this level to get the confluence to move this thing forward. And then what else happened? Let me see. And then that's how, and then identifying market structure with the macro level, right? Seeing where we were, where we're headed. Are we exhausting sellers? Are we exhausting buyers? Are we in an indecision? That's how you kind of make a game plan around your trades, right? So I think that's it for this trade. Hopefully you guys kind of benefited from how I was explaining things. Maybe you can set your charts up like this, and you can kind of look at the takeaways from it. You know what I mean? Cutting your losers quickly is very important, especially if you make an aggressive entry. The cool thing about making an aggressive entry is you never have to put in your full size, and you can go pretty much right next to your stop loss technically, and then knowing that you're going to get out quickly. If you just keep that in your mind, you won't have too many issues. Trading your setup is very important. You know what I mean? Trade what you know, trade what you're good at. Patience is, you hear it all the time. It's a buzzword, patience, discipline, blah, 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 blah. But I mean really like patience, you know what I mean? So, yeah, thank you guys. Peace.